Welcome back, everybody. This is part 2 of a 2-part series on the Trump tax bill that just got through the House. A lot of important stuff here. If you haven't seen the first part, don't worry about it. They're not necessarily in any specific order. Go ahead and finish watching this one. At the end, I'll drop a link to the first part. A lot of great stuff in there that I think you really want to know. But just remember, this thing hasn't passed yet. So with that, let's go ahead and get back to where we left off on the last video. And here we go. Moving right along, casualty losses. This one was kind of a surprise to me when they changed it. And currently, you can only deduct casualty losses if it was a presidentially declared disaster under Section 401. So what that means is most casualty losses are not deductible. Haven't been since the TCJA passed. And that one was kind of a surprise because bad things happen to you. At least you could get a tax deduction. That one went away. To be honest, I don't see that one coming back. That's another place they can claw some money back. So I think casualty losses are going to stay out. And if this bill that the House has passed gets through the Senate, or if this part of it does, that's going to become permanent. And if that's the case, then casualty losses as a general rule are going to be out unless we're in a hurricane or something like that where it's a major natural disaster and it was declared such by the president. Otherwise, those are out. I think that's gone. I don't think we're going to see those anymore. So that's that. Now, this one was a big deal when it happened. I couldn't believe it, but the miscellaneous itemized deductions, when that one went away, I'll be honest, I was shocked. I didn't expect that to happen, but it did. And so that is, think about your unreimbursed employee expenses. That was a big deal. Think your sales guys who are out traveling and whining and dining people. Think your construction workers who may be traveling and staying in a different city for weeks and months on end. At least we would get that per diem deduction to help compensate for all the expense from being gone and being away from our family. Think your truck drivers who are over the road but are W-2 employees. All those kinds of people lost that unreimbursed employee expense. Think of people who, especially nowadays, a lot of us work from home and our employers have a lot of remote workers. Those employees don't get to deduct home office expenses, maybe extra monitors they buy. Any of that stuff is non-deductible as long as you're an employee. Used to, we could actually deduct all that. And that was a big help for a lot of people, really lowered the taxes, and it was a really nice one. That went away. The only way you can deduct any of those types of expenses is if you have a small business. It doesn't have to be a small business, but if you're a business owner and those deductions are going through there. So that was a big hit back on the TCJA, and that one does not appear to be coming back. I think they're going to keep that. Once again, they got to make this thing balance, and most things are going to stay the way they were. If they give this one back to us, they got to claw something else back. And this one was not something that hasn't been brought up anywhere. It didn't make it through the House bill to be done, so I think it's going to stay. The House actually put it in there to make this change permanent. So that was one that I'd hoped to see come back, but it looks like this one may be DOA, so gone. AMT, not going to go through AMT because, let's be honest, almost nobody understands AMT. But it does appear that the current law is scheduled to be made permanent. At this point, I don't see that changing, but we'll have to wait and see how this goes through the Senate. And if AMT does change, we'll have a whole video just on AMT for those that matters. But right now, looks like we're going to be okay on that one. Okay, there's a lot of little stuff in here. I'm not going to waste time because we're going to have to see what goes through the Senate. We'll get more detailed once we have an actual full bill, and I'll make sure you fully understand everything. But a big one, a really big one that helped small business owners was a Section 199A deduction, or QBI, or Qualified Business Income Deduction. That one was huge. So how that one worked is, let's say my income was $100,000 after all deductions, and if everything else was okay, I would get to take $20,000, 20% right off the top, and only have to pay tax on $80,000. That was a massive deduction. I've actually heard that they may be looking at bumping that one up. I don't have that in these notes, but I think they may have been thinking about bumping that up a couple percentage points. We'll wait and see what happens in the Senate, so don't get too worried about that. But it looks like this one is safe. This is a big deduction for small business owners, a huge help. I think QBI is going to stick, and I think that's really wonderful, at least from a tax perspective for small business owners. It's a pretty good thing. 20% deduction right off the top, which helps us offset things, which lets us do things like pay our staff and buy equipment and things that help drive the economy. So I like it. I think that one's going to stick. The cost on this one, CBO says $684 billion. So this one's a big one. But I don't see an appetite for this one to go away. So I think this one's going to stick, and I'll keep you up to date. Okay, another one is a big deal for small business owners is 100% bonus depreciation. This one's a big deal. It also makes things very simple in a lot of ways from a tax perspective. For those who get K-1s, it just makes a lot of things easier. But it's 100% bonus depreciation. Affects a lot of different things. But just to keep it simple, that had dropped down to about 40% this last year. I think that one's going to stick. We're going to get back to 100%. What does that mean? That means if I go buy a piece of equipment, I can write it all off this year. Section 179 covered us for a lot of clients. It still got us that deduction, but it's more steps. You could also run into certain business owners who didn't qualify for it, cause more complications. This just makes it simple. I think it's a good thing, and I really like the 100% bonus deduction. You don't have to take it. If it makes sense to stretch it, that's okay, but a lot of times we've spent the money. Let us have the deduction. Don't make us stretch that out over 5 years or 7 years or 15 years, depending on what it is. That one's a good one. I like it. I think that one sticks, and currently it's in there, so I don't see that one changing. The estate tax. This one's a big one. There's been a ton of tax planning that's been done over the last 8 years trying to get ahead of this because the estate tax limit was up around, I think, $13.5 million. And everybody was worried that was going to drop back in half roughly, and we could have a lot of estate tax problems. This looks to be made permanent. I think they're going to put it up to about $15 million. I don't have that in front of me right now, but that's pretty close. Once it actually gets all the way through, I'll give you hard numbers that you can really plan on. So I think we're in good shape on that now. That's going to make things a lot easier. A few other things. Just quickly, R&D expensing rules. If you got a small business and you were doing R&D, that's something you're going to want to pay attention to. We already talked about bonus depreciation. Corporate tax, if you have a Schedule C, looks like we're going to get that locked in at 21%. Maybe a AI moratorium for states on AI regulation. We'll see what happens there. But that's it. The main thing I want you to understand is this is the House bill. This is not law. It has not passed the Senate yet. It has not been signed by the president. Some things are still moving around and going to be adjusted. Remember, we had the deal on tips. There is something on tips. I don't have that here, but let's wait and see what happens in the Senate before we get too worried about that. For a lot of guys, I know what you're thinking. Oh, if there's no tax on tips and overtime, I'm going to restructure how I pay myself. I'm guessing that's not going to work for most of us. The rules are going to have income limits. They're also going to most likely prevent a owner-operator from doing that with himself, so there'll probably be more than 2% owner limits, I would assume. So don't get too excited about some of those things there. Once it passes and we know all the rules, then we'll start working on some strategies to take advantage of them. But my guess is on a lot of that stuff, especially for the more than 2% owner, we're not going to be able to use them anyway. And so don't get too excited, concocting all kinds of crazy things and rebuilding wage strategies. This thing's not law yet. Let's not get ahead of it. Let's pay attention to it. But one of the main things I wanted to do here is to stress, slow down. Let's see what happens when it gets through the Senate. More things are going to move. And let's make sure we're making the right decisions for the right reason with the actual law. Don't go crazy and half-cocked and setting up this and setting up that when we don't even actually have a law in place yet. So slow down. Stay tuned. If you haven't subscribed yet, do that. I'm going to keep you up to date. I'm going to give you the best I can, the real answers. I don't try to play games, and let you know what you can really do, what you really can't, and do our best to help you save taxes and plan for the future. And with that, we will see you again soon.